Hello friends, welcome to my channel Prabjot Study Point. Welcome to another video on accounting, and this video is about the double entry system of accounting. So let's get started. Firstly, what is the double entry system of accounting? See, the whole accounting system is based on the double entry system. This system says that every monetary transaction which is taking place in an organization, it will affect minimum two accounts, out of which one will be debited and another will be credited. Right? So if a transaction is taking place in an organization, then it must be affecting at least two accounts. If the two accounts are being impacted, then one will be debited and another will be credited. And if more than two accounts involved in a transaction are being affected, then if the few gets debited, then the other will be getting credited. Right? Sometimes we get confused by the term double entry system, that an entry is recorded two times. No, double entry system does not mean that a transaction is recorded twice. Rather, it means that at least two accounts will be affected by a transaction. Right? So don't confuse it. Don't take it as recording a transaction twice. Rather, it means that at least two accounts will be impacted. Right? So suppose that if a transaction is taking place in an organization, an organization is purchasing goods. Right? So if the goods are being purchased, suppose on cash these are being purchased, so here two accounts are being impacted. The first one is the purchase of the stock, and the second one, that is the cash balance of the account of the organization, is getting reduced by the purchases. Right? So if any transaction take place, suppose that sales take place in the organization, sales of the goods take place in the organization for the cash. So in this example also two accounts are being impacted. The first one is cash and the second one is the sales of the goods. Right? So double entry system says that a transaction will be impacting at least two accounts. Right? And if it is affecting two accounts, one will be getting debited for sure and the other will be getting credited. And it is only because of this double entry system of the accounting, the total of the debits of an organization is always equal to the total of the credits. Right? So at any time you will be finding as the total of the debits will be equal to the total of the credits. Okay, I hope that what is double entry system, this is clear to you. Right? Now come forward to the next thing, which is the golden rules of the accounting. Now we will be covering up with what are the golden rules of the accounting. See, if we are saying that a transaction will be impacting two accounts, right? So what are these types of account, and how we will come to know that which account will be debited and which will be credited? Right? So we must firstly be aware about the types of the accounts in the organization, right? And then knowing the rules as to which account will be debited and which account will be credited. Right? So this is the golden rules of the accounting, which tells us that which account will be debited and which account will be credited based on their classification. Right? So we will be covering here the types of the accounts and their debit and credit rules, which are also known as the golden rules of the accounting. See, there are three types of the accounts in an organization. Firstly, these are personal accounts. Then we have real accounts and nominal accounts. So personal accounts, real accounts and nominal accounts are there. Right? Now let's cover them one by one and also their debit and credit rules. So firstly, I'm going to discuss the personal accounts. Right? What are the personal accounts? See, personal accounts are the accounts of all the individuals and the business entities or the organizations or the institutions which are interested in the organization, which are involved in your business. Right? So with any individual, with any business organization or entity, right, your business is getting involved with, your business is getting contract with, then that all those accounts will be your personal accounts, right? So for example, the account of Sohan, suppose that Sohan is your supplier, right, the supplier of your organization. So the account of Sohan, suppose that the organization is purchasing goods from ABC Limited. So this ABC Limited, it is a business entity, it will also be a personal account, right? So the accounts of all the persons, all the business organizations are categorized in the head of personal accounts, right? So the debtors and creditors account, debtors and creditors, the bank account, the capital account of the owner, the drawings account of the owner, right? So these all are related to either an individual or a business organization. So all these accounts are the examples of the personal accounts, right? So the accounts of all the individuals, all the employees, all the salary, all the employees, all the suppliers, all the customers, all the business institutions, right? Or the bank account, the debtors and creditors account, the customers account, right? The capital account of the supply owner, the drawings account of the owner. All these are examples of your personal account, right? And how the rules of debit and credit are applied to these personal account. The rules are debit the receiver and credit the giver, right? So we will be debiting the account of that person or the business entity who is receiving something from the business. So debit that person's account who receives something from the business, and credit the account of that person who gives something to the business. Let's understand this with the help of an example. Suppose that you paid rupees 10,000 to Mohan, right? Suppose that the goods were purchased and Mohan is being paid rupees 10,000. So because Mohan is a personal account, so Mohan is receiving something from the organization, Mohan is receiving something from the business. So this means that the Mohan is receiver. That is why the account of Mohan will be debited, because debit the receiver is the rule for the personal accounts. And what will be credited is the cash. How this cash gets credited, we will be understanding this when we will be knowing the next classification of the real accounts. So till now understand this, that why Mohan is getting debited, because Mohan is receiving an amount of rupees 10,000 from the organization, and debit the receiver is the rule of the personal account. Mohan is the personal account, right? Suppose that let's take another example. In this example, we paid cash worth rupees 10,000 to Mohan. Now suppose that if the cash is being received from Mohan, right? So if I receive cash from the Mohan, if the organization is receiving cash from the Mohan, so in that particular case, Mohan will be the giver, because Mohan is giving something to organization. So in that case, Mohan will be credited, because Mohan will be the giver, right? So debit the receiver and credit the giver is the rule of the personal accounts of the business organization, right? I hope that this is clear to you. Now let's come to the next classification of business accounts. The next classification is the real accounts, right? So what are the real accounts? Real accounts, see, are the accounts of all the things which are in the possession of the business organization and the value of which can be measured in terms of the money, right? So we can say that the account of all the assets, because the assets are in the possession of the business organization and their value can be measured in terms of money at any point of time. So all the account of the assets are the real accounts, right? So cash is the asset of the organization and it can be valued in terms of money, right? So always remember, the value of any possession of the organization which can be termed in the terms of money, that will be the real account, right? So cash account, The value of machinery can be known at any time. So the machinery account, furniture account, building account, stock account, the goodwill account, the patents account, right? So all these things are in the possession of the business organization and their value can be found out at any time. Then that is why these all are the real accounts, right? So real accounts are the accounts of all the assets, all the possession of the business organization, the value of which can be termed in which can be measured in terms of money at any point of time, right? Now, what are the debit and credit rules for the real accounts? The debit and credit rule says that debit what comes in, credit what goes out, right? If any property it comes into the business, it will be debited. Debit what comes in, right? And if any property, whenever any property it goes out of the business, it will be credited, because credit what goes out, right? So if any property is coming into the business, it will be debited, because debit what comes in. And if any property it goes out of the business, then it will be credited, because credit what goes out, right? Let's understand this with the help of an example. Say machinery worth rupees 1 lakh was purchased for cash by the business, right? So here firstly two accounts are being impacted. The very first account is the machinery account and the second account is the cash account, right? So the two accounts which are being impacted here are the machinery account and the cash account, and both these accounts are the real accounts, right? So the rule will be applied to them as debit what comes in and credit what goes out. So what is coming into the organization? Machinery is being purchased, right? So machinery is coming in the organization. So machinery will be debited. So machinery account debited. And what is going out of the business? The cash is going out of the business. So cash will be credited, because credit what goes out, right? So machinery is coming in, it will be debited, because debit what comes in, and the cash is going out of the business for the machinery being purchased. So cash will be credited, because credit what goes out, right? So till here we understood the two types of the account, personal accounts and the real accounts. Personal accounts are the accounts of all the individuals and the business entities involved in the organization, and the real accounts are the accounts of all the positions of the organization which can be measured in terms of the money, right? And we also understood the debit and credit rules. Now coming up to the last classification of the types of the accounts, that is the nominal account, right? So what are the nominal accounts? So the nominal accounts are the accounts of all the expenses, all the losses or all the gains and the revenues that are taking place in an organization, right? So the nominal accounts are the accounts of all the expenses, losses, revenues and profit, okay? So we can say that the rent, salaries, commission, insurance premium, these all are the expenses of the organization. If the commission is being received, then it will be a revenue. If the commission is being paid or the insurance premium is being paid, then that will be an expenditure for the organization, right? Similarly, the bad debts are also the loss for the organization, the amount which has not been recovered from the debtor. So this is a loss for the organization. The purchases, the sales, the discount allowed or even the discount received, right? So all these things are representing either the expenses or the income of the organization, right? So these are all the nominal accounts, right? So what is the rule of the debit and credit for the nominal accounts? Debit all the expenses and losses and credit all the revenue and profits. So if all expenses will be debited and all the incomes, all the revenues will be credited, right? So if the rent is being paid, if the salary is being paid, commission is being paid, or the insurance premium is being paid, the bad debts are occurring in the organization, all these are either expenses or losses. So all these will be debited, right? If we are receiving the commission, if we are receiving the rent, right? If we are receiving the discount, if the sales are being made, right? So all these things are the revenue for the organization. So these will be credited. Right? I hope this is clear to you. Let's further understand it with the help of an example. Suppose that the cash was received the rent was received in the terms of the cash worth rupees 10,000. Right? So here also the two accounts are being impacted. The first account is rent and the second account is cash. Right? Rent and cash are being impacted. So rent here is your nominal account and the cash is real account. Now apply the rules. Rent, nominal account. The rule is rent is being received. So credit all the revenues and profits. So we will be crediting the rent account. And the cash account, which is the real account rules are debit what comes in. Cash is coming in the organization, so cash will be debited and the rent will be credited because rent is being earned, right? So it will be credited and the cash is coming in the organization, debit what comes in, so cash will be debited and the rent will be credited. Or the journal entry will be cash account debited to rent account by the amount 10,000. Right? I hope that this is clear to you. The golden rules of the accounting. See, because if you will not be knowing the golden rules of the accounting, you cannot pass the journal entries and make the further practical problem solved. Right? So it is very important to get a clear clarity of the golden rules of the accounting. Right? So there are, till now we have understood that there are three types of the accounts. Either they will be real accounts or the personal accounts or the nominal accounts. Right? So what you are supposed to firstly do before passing a journal entry is that you are supposed to identify the type of the account. Right? Whether it is a personal account or the real account or the nominal account, then apply the rule. Right? Then apply the rule of debit and credit. So identify the accounts which are involved in the monetary transactions. Right? There will be either 2 or 3 of the accounts, at least 2 accounts will be getting impacted. Right? Then after knowing the accounts, identify what was the type of the account. Right? Apply the rules of the debit and credit to the account and then pass your journal entry. Right? Let's understand this with the help of an example again. Suppose if I say that salary paid rupees 5,000. So here two accounts are involved. One is of salary and the another is of cash. Right? So salary is an expenditure. It is a expense for the organization, and cash, it is a real account. Right? And the salary, it is a nominal account. Right? So the rule will be the salary is being paid nominal account, debit all the expenses. So salary account will be debited and the cash is going out of the organization, credit what goes out. So to cash. This will be the journal entry. Thank you.